It's about to begin. Hey, everybody, you're watching Bull, Boom, Bear, Bust. My name is JJ, back with another dose of economic reality. As always, we've got a good one to get into today. Today, we're going to go right to this chart right here. This is the 10-year Treasury minus the 2-year Treasury, and this is known as the inverted yield curve, basically, right? We see the longer securities, the longer treasuries, yielding less than the shorter ones, which is just the opposite of what it should be. But the danger isn't from the inversion, it's from when the inversion goes back to normal or when it normalizes, right? When it uninverts, so to speak. So let's bring up this chart right here. And if we see all the way to the left side there, we see recessions in the darker shaded areas. And that happens every time the inverted yield curve normalizes. Go up to the early 90s there. Of course, the financial crisis. Well, first you have the dot-com bust after 1999, inverted, then normalized, then the recession. We see the financial crisis there going further to the right there. We see a slight inversion, and of course the huge recession slash financial crisis. Well, look to the towards the right side here. We've got the biggest inversion that we've seen since going all the way back to the early 1980s. Remember what happened in the 1980s? They had to drastically raise interest rates to stave off inflation back then. What do we see today? We see the yield curve inverted, not as bad as the 1980s or not as long as the 1980s, but still a pretty big inversion, since then. So looking back over 40 years, a very big one. So this is alarming a lot of people. A lot of economists out there are saying it's about to begin because it's not when the inversion happens, because it's been inverted now for a couple years. But when it comes out of inversion, and that's where we're about ready to head to. Let's zoom into a 1-year chart. Right here, if you look to the right there, we see that we're about ready to normalize or uninvert. All right, so this is on our doorstep. Now, could something happen to stave off another economic downturn? Well, sure, they could drop rates, they can do more helicopter money, but right now, inflation is so high that it's very unlikely that those things will happen. They could do those things, but guess what? That's going to make things worse, but only in a different way. Instead of a crash and a deflationary recession slash depression, we're going to see an inflationary depression. Because when things are too expensive, of course, that causes a lot of problems and struggles for people. But when prices crash and the wealth vanishes and many jobs are lost and people have to hit the unemployment line, that's also bad. So it's pick your poison. I mean, what kind of bad do you want? Do you want inflationary bad or deflationary bad? Or could they allow some deflation like the 2007, 2008 financial crisis? They'll allow prices to start coming down, to start dropping, home prices, car prices, cost of living coming down. Then they come in with helicopter money, then emergency rate cuts, right? So there's no way to tell exactly how it's going to play out. It's not like where you throw something up in the air, something that's heavy, let's say a baseball, not really heavy, but something that's not going to fly away like a balloon, something heavy enough to drop. You throw it up in the air and you're going to bet that it's going to come back down and hit the earth. That's pretty much the laws of gravity. But those types of things are not definite in the financial world, in the economy. Why? Because it's all engineered, right? So when you have somebody with a button that can just defy gravity, that makes things very, very difficult to forecast and makes things difficult to plan and predict. Why do you think we see all these so-called professionals out there that have been wrong for years now? And I won't put anybody on blast. I don't want to say any names, but many big, big names that are very famous and even very wealthy. Some of them had predicted certain price actions in the markets, like the housing market to go crash in 2019, 2020. 4 years now predicting a housing market crash. So you see what I'm saying here. So nobody really knows what's going on. Nobody knows what's going to happen behind the scenes, the type of money creation, the money printing, the type of rescue programs. and it makes it very, very challenging to say the least, right? Well, let's get into some other news here. First of all, what do you think about the yield curve uninverting, and what's our timeline? To me, it looks like we're headed towards the official economic downturn very, very soon, and that's what we're going to see. We're going to see massive, massive job losses, and likely unlike anything we've ever seen. It could be as bad or worse than any of these previous economic downturns, but it's going to be much different this time because inflation is so much worse and so much higher. Let's get into this next bit of news. Something else that we predicted here came true. We said right here that the rescue programs in the long run would not help. They were just temporary fixes. They were just band-aids on a broken leg. And of course, what do we see now? We see evictions surging in many cities, and in some cities already setting new records. In some of these cities just ended the moratoriums recently, like LA and California here just ended the evictions earlier this year. I think just a few months ago we reported on it. But here's the big news that just came out here. Denver, as rents soar, Denver on track to set new record for evictions. New record for evictions, right? So another case where we're right. Many people said, no, you're doom and gloom. That's not going to happen. These rescue programs, are solutions, and that's all they had to do. That's all they could do. They did what they could. Well, guess what? It made things worse. If it made things better, would we see a record being set right now for evictions, right? And I'm not happy to report this. I'm not sitting here smiling from ear to ear saying I'm right, I'm right. I'm just saying that these things were obvious if you just use a little bit of common sense. The more you try to fix things by throwing money at it, the more it's going to make things worse, because too much money, too much liquidity, too much artificial demand is what caused the problem to begin with, right? And we have this false economic boom based on money creation, based on people going into debt and spending money. Yes, that creates a economic boom, but then what happens when people get maxed out, when people can no longer afford the high cost that got bid up because of all the easy money? You see what I'm saying here? So community groups, city council members demand increase in funding for rental assistance. So what do they want to do? They want to throw more money at the problem. No, the solution is to let things play out, what we call a free market. And it'll be temporarily very, very painful. A lot of people are going to be losing their homes. They'll have to move in with relatives. Maybe they'll be homeless. Maybe they'll go to a shelter. Maybe they'll have to convert more hotels into shelters like they are now in some cities. But what happens then? Then you finally see prices correct. You finally see housing coming down. You see rents come down. So the housing market's a little bit different because you can just continually back the banks and allow banks to loan out money they don't have, and that keeps people bidding up home prices. But rent is different. If people don't make enough money month to month, without having, they can't take out a loan. In other words, you're not taking out a loan to pay your rent in most cases, unless you're really doing something unusual and paying rent with home equity loans from maybe borrowing it from your relative or doing cash advances on a credit card, crazy stuff like that. But 99.9% of the time, it's just people paying their rent out of money they have in their savings or checking account. So this tells you that the savings rate is not doing enough to keep up with the cost of living. Why did we have to have cities with these rent moratoriums for 3 years after the health crisis, right? Just that alone should tell you that something's not right, something's not normal. Sure, it looks normal. You see people, living with roofs over their head. You think everybody's rich. Oh, wow, rent's $2,000 a month in the city. Look at all the people. The apartments are almost filled. But you don't notice things like this with your bare eye, so you have to really get into the news, So we're about ready to see reality hit in Denver, but it looks like they're just going to throw more money at the problem and give money to the renters that can't afford their rent. And, that's the humane thing to do, is what they're going to say. That is the caring thing to do, is what they're going to say. But unless you're going to do it permanently, it's just going to make things worse. And guess what? The landlords are going to raise their rents even more if they know that these rescue programs are going to be implemented to help people pay their rent. So why lower the rent if you're just going to get it anyways. You're just going to get it paid out from some rescue program. Anyways, what do you think about this? Am I wrong? Am I bad for wanting prices to correct to where people can actually afford them? Please let me know what you think down in comments. Let's talk about something else here that most people have to deal with, and that's the cost of an automobile transportation. Wholesale used car prices increased 1% in September. They're down 4% year over year, but they increased 1%. This one's out of calculated risk. I saw a few different articles here, but I thought I'd give a shout out here to calculated risk. And he's quoting the Manheim Used Vehicle Index. We've shown that index here many times. We've shown that chart here many times. And wholesale used prices increased in September from August, down 4% year over year. September auction sales bolstered prices through the channel, said Chris Frey, Senior Manager at Economic and Industry Insights for Cox Automotive. While there was a bit of an acceleration from August, we shouldn't get ahead of ourselves heading into the late fall winter period. We are in a crossroads for wholesale, mainly from the concerns about the UAW strike, potentially slowing new retail sales and moving buyers into the used market. Wow. So I talked about that here. I said the strike is likely going to be a buoy for car prices, because the less new cars produced, then the higher the price is going to be, because you have that supply versus demand. And the higher new car prices are, then more people are going to be going towards used cars. So there's more demand now for used cars, right? So I don't see a big price correction coming in for automobiles for a while now, with the strike and everything else happening. Again, we could be wrong, but when you look back at all the things we've talked about, even though we've been called doom and gloom and negative Normans, we've been right. Sometimes you just have to wait for a while, but then ultimately, we've been right. And evictions are going to get worse. Pretty soon, foreclosures are going to start surging. Right now, they're at historic lows. So we're still at the very beginning of this economic downturn. I mean, all the money thrown at this has really delayed things, kicked the can down the road. How many times have we said that on this channel? And it's taken a long time, but because it's taken a long time, now we have this nasty, nasty cost of living slash inflationary crisis on our hands to deal with. So hope you are well. Let me know what you think about the yield curve inversion, about the topics that we covered today, about the rents there in Denver and the all-time high now evictions there. So it looks like the rescue programs didn't work. We're seeing all-time high evictions, right? No surprise, no shock. Everybody, thanks for watching. We're going to wrap this one up. Keep stacking. Big love, and talk to you very, very soon. Peace.